In today's video, we're going to talk about what is an opportunity zone and can it help you, the small business owner. Hey everybody, welcome back to the channel. Greg Winteregg here, CEO Matterhorn Business Development. And today I'm joined by my guest and friend, Edmon Rakipi. And we're going to talk about an opportunity zone. What is it and can it help you, the small business owner? Now, Edmon, we have to start off with the most important question. Did I say your name right?
You did. You crushed it. Yeah, and that's rare. I've heard Rapiki, everything.
Okay, so Rakipi is what nationality?
It's Albanian.
All right, good. Now, Winteregg is Swiss, and it's German Swiss, and it means winter Ecke. Ecke is a slope. So it's a wintry slope. So on the north side, when the sun comes out in the spring, it holds the snow. So does Rakipi have its own whatever?
It does. So Raki is actually moonshine in Albanian.
Yes.
And P is actually like to drink. So Rakipi means drink moonshine.
I love that.
Yep. And I'm oddly sober here for this day. So.
Well, it's just the morning of a holiday weekend.
That's
you
true.
haven't started yet. You wait till noon, right?
Couple more hours. Couple more hours.
All right. So Edmon, we're not going to get into a big, long description of your background. It is rather diverse and very impressive. But tell us and describe as if no one's ever heard of an opportunity zone before. What is an opportunity zone?
So opportunity zones are economically distressed and underserved communities throughout the United States. These zones were picked by the senators of the state and then sent to the U.S. Treasury to be certified. There are different metrics such as the poverty rates, median household income that the senators had to use to certify their zones. Now, they were only allowed to pick 25% of the zones that actually qualified nationwide, and that led to over 8,700 opportunity zones nationwide.
Okay, so an opportunity zone then is an area in a community that has been designated to get government relief to promote business?
Great question. So this is actually a private program. So where most of the programs that you see, like tax credit programs or any other type of government incentivize, it's generally pushed by the government. These are actually private dollars going into these communities. And the thought there was anyone who, one, has the capital to really put into these communities is probably operating in the private sector. So the whole idea of the program was to free up that capital and then provide some type of tax benefit or incentive to push this capital into these underserved communities. And believe it or not, we are actually in an opportunity zone right now.
That's really awesome.
Yep.
Now, so then what you're saying is the government actually created the zone, but the government isn't dumping any of their own money in it. They created an opportunity for investors to incentivize them to put money in and then to help the small business owner if they go and set up a business in that zone.
Correct. So the zones are actually based on census tracts. So we might see a little bit of adjustment. Obviously, we have the 2020 census coming up. But yeah, that's 100% correct. As we all know, the private sector tends to operate a little more efficiently than the government does.
That's a shocker.
Right?
I'm stunned.
Very much so. And I think that's one of the biggest benefits of the program is, yes, it is nuanced and we do have to follow, certain regulations and guidelines, but it is pretty liberal in the drafting. So, the private sector could come in and really set up shop, how they see fit as long as they're inside of an opportunity zone census tract.
Okay, so then is it simplifying it too much to say that this is a zone where successful entrepreneurs get incentivized to help others who are just up and coming and trying to get established?
Absolutely.
Beautiful.
Couldn't agree more.
Okay, good. So then, is there a specific demographic of entrepreneur the opportunity zone is designed to help?
Absolutely. So if you look at the way the legislation and then also the final regulations are drafted, to make an investment that qualifies for the incentive, you have to trigger what's called a capital gain, right?
Okay.
So a capital gain is the gain on a sale of any capital asset. So it could be art, It could be a classic automobile, could be stock, could be you exiting your business. So you have to have a capital gain that rolls into what they call a qualified opportunity fund. And don't let that scare you. It doesn't
It's a big word.
Right. It doesn't
It's actually more than one word. It gets scary.
Very, very. So it doesn't have to be a fund in the traditional sense, like the funds that we run at Opp Zone Capital. It can literally just be any type of entity other than an S corp.
Okay, so give us an example using an artist. So let's say we have an artist and they paint a picture, and now they want to sell it for $5,000.
Right.
So then the gain on that would have to be valued.
Correct.
And then how does that benefit that artist?
So let's look at it a little different way. So
Okay.
we have that artist, and he sold that piece of art for $5,000.
Yes.
That buyer then went and resold it for, let's call it $10,000.
Oh, okay.
They have the gain, right?
Oh, I see.
Because the artist is technically operating that business, that probably won't come out in the form of a capital gain.
Oh, I got it.
Right. So now the benefit to
So they wholesaled it, let's say,
correct.
to a vendor, and then the vendor sold it for 10 and made 5,000. That would be the capital gain.
Correct. So
Okay.
we've got that $5,000 capital gain, and now that individual can go and they can either invest it into a venture fund that's operating in opportunity zones, or you can't buy stock, so that's one of the rules. They could find a fund that is, let's say, opening a coffee shop or anything like that in a smaller community, and place their capital gains inside of that business.
Okay, gotcha. Interesting. So then exactly how does this help?
Great question. So let's look at it from the investor standpoint, and then we'll look at it from the community standpoint. So as we mentioned, these communities are generally underserved or economically distressed based on the metrics that we mentioned earlier. For an investor to take that extra perceived risk, the government said, hey, we'll give you 3 different incentives. So the first one is a deferral on your original capital gain. And they pushed that out to 2026.
A deferral of paying tax on your gain.
Correct.
Yeah.
So
which right now I think is 23.8. Is that right?
23.8, correct.
Okay.
So now, as an investor, I'm sitting here going, do I want to write the government a check,
Right.
or do I want to reinvest in the communities, that I live in? And you don't have to live in the community to make the investment. So that's the big one, right? So let's say we triggered a capital gain today, we wouldn't have to pay that till the end of 2026.
Got it.
Then the government said, we want to make sure people are actually keeping this capital in these communities. So they said, if you hold your investment for 5 years, you'll get a 10% step up in basis. And what that means is the government will actually allow you to step up and eliminate 10% of your original tax bill that would be due in 2026. Of the gain,
Right.
correct.
It's sort of like a tax credit.
Almost. So, and that's another thing that people generally look at when the program is most of the development programs that you see are tax credit programs. So dollar for dollar. This is more of an incentive.
Fair enough.
Right.
Yeah.
So you get the 10% step up in basis. You've got that deferral, but the big one is on the back end. So Treasury says if you hold your investment for at least 10 years, any gain on the growth of your investment will be completely tax-free from a capital gains perspective.
Oh, wow.
Absolutely. So let's say that $5,000 interest ends up being a $100,000 interest. You're not paying any capital gains on that.
Wow. So then this is good for the investor into the opportunity zone.
Absolutely.
And then it's also great for the entrepreneur
Absolutely.
who sets up business in that zone.
100%. So we all know the famous tech hubs, right? We've got Silicon Valley, we've got, the Boston sector going crazy, Nashville. Those are markets that no one's really, quote unquote, afraid to invest in. But let's say I'm an entrepreneur in Memphis, or I'm in, Fargo. The chances of someone coming out and seeing me and placing capital in those areas is pretty slim, right? But now if I have a great business plan, I have a proven track record, and I'm in an opportunity zone, there's a good chance that an investor will take a shot on you. That extra perceived risk goes away with the 3 different incentives.
Okay, so then how can our viewers find out if they are near or possibly even in an opportunity zone now?
So they can actually go to our website. We have the map on there. So, and that's
Abby will put the link down below.
Perfect.
But go ahead and just give it to us. Is it simple?
It is. So it's oppzone-capital.com. And
Okay.
then the map is right under our resource page. You go in, you can just type in your address, and it'll show you if you're in a zone.
Okay.
Yep. So Florida is actually pretty big. We've got over 20 in the Hillsborough, Pinellas area.
Wow.
And then if you look in Central Florida, right around the Punta Gorda area, going all the way across the state, excuse me, almost all of that is an opportunity zone.
Holy
and the
smokes.
reason being, it's a pretty rural area once you get it through there.
So it's trying to incentivize people to actually go into that area and get some commerce going.
Absolutely. So, I mean, if you look at what we're dealing with currently in the environment, industrialization has been a thing of the past, right? So these rural areas are pretty well set up to go in and drop a 700,000 square foot industrial facility. Or,
Right.
green farming is a big thing as well. So those rural areas are conducive for those types of projects.
So give me an idea of, because also I'm kind of getting the idea, first of all, is it simplifying it to say that the opportunity zone is almost like a matchmaking zone between an investor
great way to
and
put it.
an entrepreneur who's looking to expand? Is that,
That's a great way to put
and
it.
there's an incentive there from the government for these two to do business in this particular geographic zone?
100%. And you're now seeing an increase in investments in operating businesses themselves. The way the program came out was in 2017 when the Tax Cuts and Jobs Act was put into place, kind of snuck the program into the tax code. And we didn't really have any clear guidance. So we went through 2 rounds of proposed regulations, and then the final round that actually came out late December of last year. So we had almost a 2-year gap where individuals were operating, I don't want to say blindly, but it was definitely geared more towards the real estate sector. Because it was simple. If I'm building real estate, I'm either in an opportunity zone
Right.
or I'm not in an opportunity zone.
Right.
A little different when you're a trucking company going, do I have to track my hours that my drivers are in an opportunity zone or not in an opportunity zone?
Then it gets complicated.
Very complicated.
Yeah.
So the final regulations made it a lot more easier to operate in the space. And now you're seeing the increase in investments in the operating businesses. But even with that, we've seen a projected $75 billion of capital placed into the Opportunity Zone program. And there was a report put out by the CEA, the Council of Economic Advisory, that has all the statistics in there.
Holy smokes.
Yeah.
Already 75 billion has been invested
Correct.
by venture capitalists or whatever into the zones.
Into the zones. That's pretty amazing if you think
That's
about.
incredible.
We got final regulations December 20th of 19. We really had 2 months to operate before COVID took over the world.
That's amazing.
We're still in this COVID environment, and capital is still finding its way into these opportunity zones.
Okay, so then even during COVID, this is an opportunity.
Absolutely.
Okay, so now tell me one of the coolest stories. Like I know you've been doing this now and you're really like smart, you're on top of it, but it has to make you feel good when you really help an entrepreneur. So let's look at it from helping the little guy. Give me a cool success story.
So we have a client right now who is in Memphis, Tennessee. So they're a logistics company. They've been around for a really, really long time, and they've just never had that explosion, that access to capital that would let them become a true powerhouse in the game. We're gonna
Banks wouldn't give them the money, et cetera.
right. So a solid business. We're talking 7-figure revenues, but never that tilt point where they could really explode. And,
Right.
This particular entrepreneur is very forward thinking. He's now seeking about $30 million in Opportunity Zone capital.
Awesome.
He's going to relocate his operations into Opportunity Zones in 5 different states.
Awesome.
And that capital is going to give him the money he needs to improve their software to make logistics, factoring, everything you need in the trucking world streamlined. So that's just one example.
I don't know how to say it. What an opportunity
Absolutely.
for smart people
Right.
to get together and then figure out how to help society. Look at the problem that the whole trucking industry has, especially now,
Absolutely.
et cetera. So this is incredible.
It really is. And it can help startup entrepreneurs, or it can help existing businesses. So let's say you're a company that's seen some good success, even in this COVID environment. Let's say you're a grocer, right? They're killing it right now. Mm-hmm. You can utilize the capital gains that you have inside of your own company to then go start a second location or a third location or your fourth
and
one.
Naturally, you'd want to go start that in an opportunity zone.
Absolutely.
Because of all the incentives. And this is exactly. So I'm actually a bit stunned that here we have a government program set up so that the entrepreneurs can work together, and you kind of like have big brother, little brother kind of a thing, and everybody wins within a government regulation, and they're keeping their hands off.
Absolutely. And the reason it's structured that way, if you look back, Steve Glickman and 4 other senators really pioneered this to happen. So we're talking, I think, 2015 that the Opportunity Zone framework was put into place, right? So Steve Glickman and the Economic Innovation Group came out and said, okay, we've got to figure out a way to free up capital and get it into these underserved communities. How can we do that efficiently without having to lean on the government for complete intervention?
Exactly, that's beautiful.
So now we have entrepreneurs who are triggering these capital gains, right? You look at Steve Glickman, you look at Sean Parker, all these tech entrepreneurs that have these massive positions in their tech companies are never going to liquidate their positions if there's no incentive for them to.
Right.
They don't need the money to live on, so why would they trigger that capital gain and pay the taxes? This was a great way for them to come out, free up that capital, and put it out into the marketplace.
I love it. I love it. So then, just kind of bringing this to a conclusion, is there any other question I should have asked or any other key piece of data you would like our viewers to know of?
I would say the biggest thing, if you're exploring either making an investment in an opportunity zone or whether you want to start your own business in an opportunity zone, is definitely lean on legal counsel and your accounting team. So high level, the program is pretty simple to grasp, but it is nuanced from a reporting perspective. So the last thing you want to do is set up shop in an opportunity zone, think you're doing the right thing, and then you get to one of the biannual testing periods and you fail your testing and they pull your incentive away.
So I assume that you have those attorneys and CPAs and such that you could connect someone with.
Absolutely.
If they don't have the proper advisor.
100%. And about 6 months ago, we actually launched advisory services within Opp Zone Capital.
Perfect.
We figured, we want to make it accessible to the individuals who don't have the $500 an hour to pay an attorney to come out and at least get some guidance of how they can do this, how it works. So we're really proud that we're able to go out and help the entrepreneurs in the space or the real estate developers that aren't doing $200 million projects. They want to put up affordable housing in a community.
Right. Beautiful.
Thank you.
Thanks for joining us today,
Thank you for
Edmon,
having me.
on Labor Day holiday.
Absolutely.
We are laboring.
Yes, we are. Absolutely.
And this is how you have fun at work. So thank you for joining us. Be sure and reach out to Edmon. His group is fantastic. He's a super awesome guy. We consider him our friend. And so if you have any specific question, reach out to Edmon. He'll be happy to help you. So everybody go forward, flourish, and prosper.